assets.
Is there anything that near-term, maybe mid-term risks that could derail your growth plans?
We need to always make sure that investors will believe that we will be able to fund our growth. And you don't fund the growth from debt, because if it's just debt, one day we're going to cut dividends.
Is that what happened previously?
In the past, I would say because the 5G capex was just very high and the company only relied on one source of capital, which is operating cash flows. When all the challenges came, the operating cash flows came down. So the only way is to cut dividend or really increase debt. So the debt increased a little, but not too much. So we had to cut dividend. What we are doing now is we still are funding all this growth, but it's coming from operational cash flows, which have improved. But at the same time, there's this second pot. Pot 2 is from all our asset recycling. It is what I call capital partnerships, where we have this growth profile that we want to invest in. We don't need to just sell assets to fund this growth, but we can bring in capital partners like KKR, and then we are relying on their capital and then growing. So today, every single data center or spend that we have from our data center business, KKR is funding every single dollar, up to 1.1 billion.
Okay.
So that's how we think about capital management, funding using capital partnerships as well.